Do you know that the Federal Reserve is not actually a government entity at all? It's a private institution. The problem with a passive strategy is you're always going to underperform. By definition, you're just always going to underperform because you're deciding to own the entire market. And when you decide to own the entire market, stocks and bonds, you're always going to hold a loser. Yes, you will have some winners, but you're always going to have a loser. Once you become a Bitcoiner, you view the financial system very differently. They can say that they're the owner of the Bitcoin all they want, but you can't move it, you can't access it. You're not really the owner.
Hi, everyone. This is Jack Allwell with another Money episode. Today, we have very special guest, Mitch Moore from Strong Wealth. He is in wealth management for Bitcoiners. Mitch, welcome to the show.
Excited to be here, Jack. I appreciate the opportunity.
Yeah, it's I've been excited to talk to you for a while now. And before we get into perhaps why hodling is not the best retirement strategy, I do like to ask all my guests, what was your relationship like with money? And then maybe lead into how you discovered Bitcoin.
What was my relationship like with money? I guess for me, it really started, it really goes back to when I was 16 and my parents got divorced. So that was a big disruptor, but also a big catalyst for where I am today, to be honest, because I realized that a lot of things are out of my control, and I wanted to make myself the best version that I could be in order to, be successful is kind of how I thought of it at that age. And so I started diving into self-development books and whatnot, and I eventually came across Money Mastered the Game by Tony Robbins. He wrote that, he co-authored that with a owner of one of the largest RIAs, Registered Investment Advisors in the US, Peter Mallouk. And that really got my toes wet into investing. Previous to that, I had only thought about, investing as like going to Wall Street, working on Wall Street, living in New York and whatnot. And I hated the idea of that. I'm a small town Midwest kid, and so never have zero desire still to this day to go to the big city, to be honest. But what they were able to lay out for me in that book was, the differences between different financial planners in the industry, financial advisors, how people make money off commissions or fee only, all these different things. Also went through different investment strategies, whether it was Ray Dalio or some other big name portfolio managers. And so for me, money was, the opportunity to be successful, I guess. So I needed to learn as much about money as I could is what I felt like at that time. It's significantly transitioned from then, diving deeper into my faith as a Christian, coming to understand, money as a tool rather than really something that provides security or will be, providing my future, I suppose. So really it's a tool to live out, the values that I have and want to live out on this earth. And then coming to Bitcoin, that was 2020, 2021 timeframe. I'm working at Charles Schwab actually at the time. And I guess the first seed planted would have been a gold bug. He called in asking some questions. I don't remember what he asked, but he said, "Mitch, you seem like a smart guy. Do you know that the Federal Reserve is not actually a government entity at all? It's a private institution?" And I was, kind of taken aback by that, surprised. I said, "No, I didn't know that." And at the moment, I'm kind of questioning myself, like, man, like I just spent 4 years to get a finance degree, and they didn't tell me this. Why? Why not? Why didn't I know that? And he said, "Well, I just encourage you to read a book." And he suggested that I read The Creature of Jekyll Island. You've probably heard of it. Maybe folks listening have heard of it. If not, highly recommend it. It's basically the creation story of the Federal Reserve and then the evolution over time of fiat money and, just how that became corrupted. Money became corrupted in many ways. And so that was really the first seed planted for Bitcoin. Obviously, we're on a bull run in Bitcoin at that time. So it's kind of, it's being talked about quite a bit. And I wanted to start this business I'm in now, Strong Wealth, advising people on their money. And so I'm like, well, I need to understand what this Bitcoin thing is. I need to know if this is worth owning or not, because people are going to ask me questions. People are going to come to me looking for answers. And so I put in the proof of work, if you will, and listening to numerous Michael Saylor podcasts, reading, all the safety Ambus books, the Bitcoin standard, the fiat standard, etc. So much more went into that, and then coming to understand Bitcoin at that point, and then it's been a journey from there, as it is for everybody else. But that's the long story short.
Cool. So getting into I guess the mechanics. So what does a Bitcoiner have to worry about or be thinking about that someone that doesn't own Bitcoin, what do Bitcoiners need to be thinking about with as they go through life?
Very broad question, of course, but honestly, I think Bitcoiners have less worries than people who don't own Bitcoin, from my perspective, just how, from what I'm seeing in our financial system right now. But it does introduce a lot of variability. For Bitcoin, it really opens up a lot of other possibilities, to be able to personally, hold and secure your Bitcoin, your assets, with stocks or, other index funds, other traditional assets people invest in. It's always at a custodian, and you're very trusting that they're doing the right thing, even though, they're lending it out on the back end and doing a bunch of things. But, with Bitcoin, you have the opportunity to really opt out of that system entirely and take control of your Bitcoin. And so for Bitcoiners, thinking about, one, how do I secure my wealth in a way that, I'm taking personal responsibility and not relying too much on other people to do this for me. And then taking that a step further, once you've taken that personal responsibility and ownership of your Bitcoin, I know something you wanted to get into was the estate planning side of things. So if I zoom back out for a second, coming from the traditional financial world, working with Bitcoiners now, we still take a comprehensive financial planning approach with the service that we provide. So what does that mean? Really, if I had to boil it down, we're at the center of everything, that could touch our clients' financial lives. So it could be cash flow, investing, taxes, risk management, estate planning, retirement planning, all of these different pieces of the pie, if you will. We're at the center of it, giving advice on all of those different pieces from a holistic perspective. And so that, that foundation came from the TradFi world and our experience in that, but we believe it's still a great approach to take for Bitcoiners. However, Bitcoin, most people, if they're even open to it at all, in the TradFi space, view Bitcoin as a small allocation in your portfolio. 1 to 5%, it's a speculative asset, blah, 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 blah. For us, we don't view it that way at all. We view Bitcoin as a fundamental change to how we view the entire financial planning process in general. And so one piece of that, where I was going with this, is, okay, you have self-custody Bitcoin. Now we're thinking through a Bitcoin estate plan. How do I pass this Bitcoin to the people that I want it to get to effectively? How do I ensure that, okay, no matter what happens to me, no matter what happens to me and my wife, or her, our assets, our wealth, our legacy will be able to pass on for generations. And I believe that is the, one thing that Bitcoiners should be worried about, should be thinking about, to your point, but aren't. It's a very big blind spot as far as what I'm seeing right now with folks that we're talking to. Pretty much everyone, if I ask them, what's your estate plan look like? They don't have anything, or they only have a will. They don't have a Bitcoin inheritance plan laid out. And so they've put in the work to understand Bitcoin. They've put in the work to stack sats, build up their stack. But now, if something happens to them tomorrow, that could very easily completely vanish. So what was it all for? Now your wife doesn't know where it is. She doesn't know how to access it. Something happens to you both on a flight to a trip or something that you're going on. Kids have no idea. They see this little calculator looking thing, in your house. They very easily could throw it away. And so, with the estate planning piece, that is something that's very overlooked. It is a massive blind spot for Bitcoiners right now. And it's one area that we are really offering a ton of value to folks currently. So we could dive into that more if you want, but just to make your broad question a little bit smaller and direct, estate planning is one of the most overlooked, aspects of Bitcoin that Bitcoiners should be worried about, but don't seem to be so much.
Hmm. I mean, can we just talk briefly about like the pros and cons of keeping it on, or you like keeping one's Bitcoin on exchanges for like the estates planning side, I guess? How does,
Yeah, I mean, you know, uh, I'll start by just saying that any custody structure that you choose, there are trade-offs. So, yes, there's a big push for good reason to self-custody. Um, leave it on an exchange. Yes, it might make the estate planning easier, to where you can just assign a beneficiary. So, like River, for example, they're a great Bitcoin exchange. Let's say you held your Bitcoin on the exchange still. You can assign a beneficiary to that, and okay, it's like your stock account now. It's like your IRA, whatever other accounts you may have, where you can put the beneficiaries on there, and that takes care of it. So, yes, it might make that estate planning piece easier. However, you're also now you also now have the trade-offs of privacy, of security, in the sense of, okay, I'm trusting this exchange. I would say most people is probably Coinbase, which I would highly recommend against, for many reasons. But you're trusting them to one, keep it there, just not move the Bitcoin. So, with like FTX, for example, we saw they're lending out all of the assets on the back end, and all of a sudden, your Bitcoin's gone. That's a risk. You look back over history, there's been many exchange hacks or fraudulent, practices that have caused many people to lose a lot of Bitcoin. So taking that personal responsibility, you're not required to trust anybody else to secure your wealth, which is a groundbreaking, invention, if you will, that Bitcoin offers. And so I still do encourage most everyone to take self custody. Yes, it makes the estate planning a little bit more complicated, but we can have our cake and eat it too in many ways, as long as we're taking the necessary precautions to build out the estate plan properly and an inheritance protocol that makes sure that no matter what happens, my family will be able to benefit from this.
mhm. Could you talk through like the what you call the inheritance like protocol? Like if you were to take possession of your keys, yeah, can you walk through if someone were to pass and they've maybe set something up, but talk through those structures?
Yeah, absolutely. So, um, with any Bitcoin estate plan, there's three primary pillars, if you will, that you need to make sure are taken care of, so that there's no holes, no matter what would happen. So before I go there, with every estate conversation, we're addressing first the custody structure. So you have to nail down, how am I going to custody this Bitcoin before you start to attack these three pillars that I'll get into, because that your custody structure informs how you actually take care of the rest of this stuff. So just like you mentioned, for example, why not just hold it on an exchange, and then I can assign a beneficiary, and that takes care of my estate plan. There we go. That makes it a lot easier. So if that is the route that someone wants to go, then okay, that does change, these three pillars that I'll talk about. However, most people, that's not the case, and I wouldn't recommend it. But if it makes sense, it makes sense. There are some situations where it might. Um, so we have to first determine, okay, how are we going to custody the Bitcoin, and then from there we go into these three items. So first, you have conveying legal title. So that's the first pillar of an estate plan that you have to take care of. So most people traditionally, they view that as, okay, I have a will in place, I have a trust in place, or I've assigned beneficiaries to my accounts. So with your traditional IRA, your 401k, your taxable brokerage account, when you assign a beneficiary on there, that takes care of conveying legal title. So you pass away, okay, the beneficiary is now the rightful owner of these assets. However, like we've said, when you take self-custody of your Bitcoin, you've got it in your safe in your house and it's on a cold card or whatever, you can't just slap a beneficiary on there and have that taken care of. So, okay, let's say you do nothing on that side of things. You have no will, no trust, nothing in place. What's going to happen? The biggest risk with that is now your Bitcoin is going to go through the probate process. Most people are familiar with what that is. Essentially, your estate is going to go to the court. The judge is going to decide what happens with your assets. Where do they go? And so, two big issues, really. One, the court's now deciding what's happening. Nobody that I've met really wants that. They want to decide what's going to happen with their wealth, not let a judge that doesn't know them, doesn't know their family, decide what's going to happen with their wealth. Second thing is that becomes public information now. So Jack owned X amount of Bitcoin and it went to his two kids, these people, whatever their names are, and so that's public information that anyone could go find. And so if we get into a world where Bitcoin, yes, is very valuable right now, but it likely is going to continue to be extremely valuable into the future, and people are going to maybe search out Bitcoiners for possible physical attacks or phishing scams or whatever it may be, you've now just placed that target on your kid's back. So they're now a target for physical attacks, maybe tax evasion as well, or litigation concerns from others. If it's like your brother's like, hey, he told me he's going to give me the Bitcoin and not the kids, and so all of a sudden your kids could be in the lawsuit, for example, that they don't want. So you do nothing, you run a lot of risks there. You take care of it with a will. Well, it's better than nothing, but it still goes through probate. The judge will now follow usually what your will says, but he could not, and that's still public knowledge. So for us, using a trust in some form or fashion is the best way to avoid the probate process, maintain privacy, and gain more control, even if something happens to you as far as what happens to the assets. So that takes care of conveying legal title. Second pillar is that Bitcoin inheritance protocol that you asked about. So this is facilitating the key possession to the right people at the right time. So, okay, great. They have legal title now through a trust structure, but if they don't know where the keys are, they can't access them. They don't know how it works. It doesn't matter. They can say that they're the owner of the Bitcoin all they want, but you can't move it. You can't access it. You're not really the owner. And so you have to lay out a treasure map, if you will. And we have a template that we use for all of our clients that helps them understand what needs to be included, how much needs to be included, because you don't necessarily want to provide too much information just in case it gets into the wrong hands at the wrong time. But lay out the treasure map of here's where you need to go. Here's where the hardware is. Here's how to access the Bitcoin. And then you communicate that with your wife, with your heirs, your executor, whatever, of, hey, here's where the documentation is. Something happens to me, something happens to us. Here's where you can access that. And that will help you then, go through the process of accessing the Bitcoin and facilitating that maybe to our kids or taking possession of it yourself. The third pillar is education. Okay, great. We've conveyed legal title. They have access to the keys. They don't understand what Bitcoin is. There's a very good chance they'll still sell it. There's a very good chance they'll lose it. There's a very good chance they'll make some error, some blunder in some way. And so that you have to educate also, and so that they understand what they are taking into their possession of. They need to understand that Bitcoin really is this generational asset that could provide wealth, for them for many years to come. And their family. And so if they don't understand that, then there's also that risk of, okay, they move it to the exchange it into dollars, and Bitcoin's gone. So you really have to take care of those three pillars entirely to make sure that your plan is rock solid no matter what happens.
Awesome. Thanks for that. Let's shift a little bit into your Fluvius Funds. Why don't you tell the listeners what those are and why you decided to offer those?
Yeah, absolutely. So Fluvius is our investment strategy that we utilize with many of our clients. So I will say that we don't manage money for all of our clients. We don't have to. That's a big misconception of working with, financial planner like us. They think, okay, they're gonna have to manage my money, and I'm gonna have to pay them a percentage. We don't have to do that. For some people, we do. It makes sense. They want it, and great. Others, they don't. Totally fine. We can still go through these other items, offer plan, advice, recommendations, all that stuff, just on a flat fee rate. So, yeah. So Fluvius really, this kind of was birthed out of, once you become a Bitcoiner, you view the financial system very differently. And prior to Bitcoin, I was the type of guy saying VOO and chill is probably good for most people, and that's what most financial planners, advisors do. They're just funneling their clients into index funds and saying, we're going to take a geographically diversified approach, and we're going to invest some in the US, some international, some in bonds. We're going to invest, different areas of the market in the stock market, whether it's large cap, small cap, tech, value, whatever. And they lay out this story of here's what the asset allocation is going to be, and we're just going to passively buy these 5, 6, 7 index funds over the next 30 years, and that's it. And that never really sat right with me, for multiple reasons. And it really didn't sit right with my business partner as well, who put in most of the due diligence and work to develop this strategy, to be honest. And so, there's the problem with a passive strategy is you're always going to underperform. By definition, you're just always going to underperform because you're deciding to own the entire market. And when you decide to own the entire market, stocks and bonds, you're always going to hold a loser. Yes, you will have some winners, but you're always going to have a loser. And so, okay, you hear most financial planners, financial advisors talk about, well, we don't try to outperform the market. It's really hard to do. We're not even going to go there. Investment management really isn't the biggest value that we provide to clients. It's all this financial planning stuff over here, tax strategy, estate, insurance, all that goal planning, and all that stuff is fine and dandy for sure. But at the end of the day, we are advising people on their money. And part of that is helping them make more money than they may be able to otherwise on their own through their investments. And so for us, we wanted to come up with a strategy that blends the best still of passive diversified investing and the best of active investing also, with including Bitcoin into that. So Fluvius is our dynamic asset allocation strategy that includes Bitcoin and traditional assets. So we built this from a Bitcoiner lens, if you will, of how we view the financial system, by including Bitcoin significantly and a commodities allocation and an equity allocation. There could be a bond allocation, but most of the time that's for people who are in retirement or coming right up on retirement, and it's a smaller portion of their overall wealth. But the benefits of this strategy are really, twofold. One, it's going to dynamically adjust with what's going on in the markets. So it is based entirely on trend and momentum data filters. So if we boil that down, we're going to own what is performing the best most recently. That's simply how you put it. And so for Bitcoin, for example, if Bitcoin is above its simple moving average, we have a specific time frame that we look at. If it's above that average, we're holding it. If it's below it, we're holding cash, very simply. So what does that mean? We are holding Bitcoin when it's performing well, and when it's tanking off in a bear market, we're going to hold cash. If it turns around, comes right back, we'll get right back in. But we want to provide our clients the upside of Bitcoin with downside protection. And so we're doing that with that simple trend and momentum filter, to provide, the upside without the downside in a big way. And then also we're investing in these other asset classes like equities and commodities, where again, we're deciding simply with data, what is performing the best most recently and has an upward positive trend. So we're looking at different areas of the equities markets. It could be US large cap, small cap, could be the Qs, for example, could be the S&P 500, could be the small cap stocks, it could be international stocks, it could be emerging markets. We're still looking at the whole investment universe that a traditional financial planner would look at. However, we're only choosing to own what's performing and not holding the losers. So it's a more intelligent approach to investing still in ETFs. We're not trying to trade options. We're not trying to day trade and be in and out of stuff all the time. We only trade on a monthly basis. And so we're only utilizing ETFs. So we're taking the best of what I call passive investing, or a diversified approach, and we're just applying an active asset allocation strategy to it. So I know that was a long-winded answer, but really the benefit of it is you get performance with diversification and downside protection when things may hit the fan, we'll say.
I guess I just had one thing on shifting out of Bitcoin into cash. I mean, I know you said you're not doing options, but now since there are options on like iBit, like has there been thoughts in just buying downside put protection and then just not buying or like going in and out of the actual Bitcoin?
See, well, we're starting to get more into, I'll say deeper into the weeds there. So for us, we still want to keep it simple because one, we're not trying to apply our own bias to what's actually happening. Okay, then that invites a lot of other questions of, okay, when do we buy the options? What options do we buy? In the money, out of the money? What's the time frame that we're looking at? It just introduces so many other variables that are very subjective and would require, 2 full-time people probably to manage for the amount of assets that we have. And so, for us, we'll probably end up with, maybe better performance, maybe not. It's hard to say. That's even hard to backtest because there's so many subjective variables there that you can't really understand what it would have looked like in the past. And so we want to keep it simple but still effective. And so that's what we have landed on. We don't want to introduce too much complexity, too much fanciness, if you will, because at the end of the day, we still are long-term investors. And, most people, when they're investing with a financial planner, financial advisor, they're underperforming the S&P 500. And so it's like, with our strategy, we're getting, if you go look at the back tested results, I could even share the actual results for this year. Just through this year to date, or actually from January 3rd through today, I actually looked at it this morning. So as it closed yesterday in the markets, we have 2 defaults. So it's not a good fit for everybody. We always make sure we fit the allocations to the right people. But our Fluvius 3 strategy, which is one of our defaults, it's up like 14 to 14.5% on the year. And the S&P 500 is up 1%. So, are there people on Bitcoin Twitter that are outperforming by trading options and all this stuff? I'm sure there are. But for us, we're really wanting to give our clients the highest probability of success at the least amount of risk, we'll say. It doesn't mean we're not taking any risk, but the point is, if we can get them 90% of the performance without introducing a bunch of complexity, a bunch of unnecessary risk, higher trading costs, higher taxes, all these other things, then that's good.
Is the thought of adding the commodities and equities thirds into the mix with Bitcoin just to dampen, like, I guess, Bitcoin's volatility compared to, fiat? Is that did people like request that? Or because I could see some Bitcoin maxis saying like, why are you doing anything other than Bitcoin?
Sure. So it's interesting. I guess, okay, we're getting into maybe who is this a good fit for? What
Hmm.
situations is this a good fit for? So for us, it's not a good fit for everybody. But one big situation where we saw this being an amazing fit for a client is okay, they may have, there's really two situations. But first, let's say they're 100% allocated to Bitcoin, which, as you're saying, Bitcoin maxis, that is a semi-common thing. Or let's say they're 80%, 80 to 100, somewhere there. It's a very large portion of their overall wealth. And now they're going into a retirement. So they're 50 years old. This is an example, going into an early retirement. How do I navigate this? With Bitcoin's volatility, if you have that significant amount of an allocation, you're running the risk of overspending in a bear market. So, okay, I retire now here in 2025 when, yeah, everybody's feeling really good. We're, I don't know, $150,000, 200, whatever we're at here. We retire and we drop down to 50,000. We're back down, a significant amount. Well, if we're spending 100,000, 150, $200,000 a year, we go from spending one Bitcoin based on its dollar value at the end of 2025 to now it's at 50. We're spending 4 Bitcoin a year. You better have a really sizable stack in order to navigate that on a 100% allocation. So for us, what we see is, okay, this could just be a medium term kind of fit here, a buffer, if you will, between Bitcoin's volatility and your living expenses. So, okay, we may hold Bitcoin long term, not touch it, keep it in cold storage, but for 5-7 years worth of living expenses, we'll invest in this strategy because we'll still get Bitcoin upside with a large allocation of Bitcoin, but we have the downside protection and the diversification of these other asset classes. And so that's a place where we see a good fit in navigating your early retirement scenario. The other side of the coin is somebody who may have, let's say, 20% allocation to Bitcoin, but they would like higher performance from their TradFi, if you will, portfolio or their TradFi assets. So their 20% allocation to Bitcoin, 80% is index funds, let's just say. S&P 500, keep it simple. Well, if we're outperforming the S&P 500 by 15, 20% a year, and we have less downside volatility, we have higher diversification, so less risk overall. It's really a no-brainer in many ways to utilize a strategy like this that they may not be comfortable with the volatility of Bitcoin, and that's why they've only stopped at a 20% allocation instead of 50. But if we modulate and buffer that downside with going to cash in bear markets and still having these other assets, they'll have a really good experience to the upside and the downside. And so, we're super excited about it because we believe it can be the best of both worlds for many people in various situations. But that's just an example. Another interesting fact that I'll share that we found in our due diligence and backtesting analysis is from 2014 through January 2014 through January 2025. If you had 100% allocation to Bitcoin over that time, let's just say you started with $100,000, you bought in 2014 and you just held the whole time, versus you utilize our Fluvius strategy with an allocation of 60% Bitcoin, 20% equities, 20% gold, or 20% commodities, I should say. It actually had the same CAGR, so the same compound annual growth rate as Bitcoin only, but with less than half of the downside max drawdown, we'll say, downside volatility. So, for us, it's like when we're thinking through, again, offering the highest probability of success for our clients without taking unnecessary risk, this is, a wonderful tool in the tool belt, if you will. Doesn't have to be their entire asset, or entire portfolio, anything like that. But in certain situations, it's good because we can get upside performance again, but still with diversification and downside protection.
Gotcha. And I've heard more and more people recently talk about borrowing against their Bitcoin. Have you heard anything more develop in that space in terms of retirement planning or kind of, planning out perhaps just borrowing against your Bitcoin in the future?
Yeah, I mean, we have obviously a lot of clients interested, a few where it makes sense, and we've started to implement some strategies there. I'll say the infrastructure is still not great as far as what's offered, what's out there. I know Strike has been getting a lot of attention lately with their new lending product offer. But for example, like here in Colorado, where I'm at, only businesses have access to the loans as of right
Hmm.
now. And that's a common thing actually for a lot of these institutions that are offering these borrowing, lending services. Is it's very limited in what's offered. The terms are not great. Some other providers will have a 2% origination fee, so 2% right off the top, and then a 14% APR. So interest rates just have not, I don't think, reflected actually the risk of borrowing against Bitcoin. Um, so there's a lot of trade-offs still, we'll
Hmm.
say.
Okay.
And then, from somebody who's in retirement, oftentimes people, they feel like they do want to do this. They do want to borrow against the Bitcoin and try to do, some type of buy, borrow, die strategy where, okay, never sell the Bitcoin. I continue to let the Bitcoin ride. And then I just roll over my loans, roll the principal um, into my future loans and I'll be good to go. It sounds good in theory. Obviously, you run the risk of liquidation with Bitcoin being so volatile. Whether or not we see 70, 80% drawdowns again this cycle, who knows? But that potential is there. And the feeling of having debt outstanding, a lot of people don't actually like. When they get to a retirement period, it's like, I would like a little bit more stability, a little bit more security, rather than having this large outstanding debt that's going to only continue to grow because they don't have, especially in retirement, you don't have cash flow coming in. You don't have income. You're not still working. And so the payments on the loans, there's a lot of considerations there where it sounds good in theory, but when you actually go to execute it right now, there's still some hurdles to overcome for sure. But some situations it can still make sense. I'll say that.
Mhm. Okay. Cool. Well, Mitch, thanks for coming on the show. Before I let you go, I like to ask every guest, what's the best and worst personal finance advice you've either heard or received?
Oh, um, best personal finance advice: study Bitcoin.
Okay.
Worked out well for myself and a lot of our clients. And that would be the best personal finance advice I would probably give to anyone listening if they haven't done that already. Worst, oof. Um, that's a tough one. I haven't personally received too many takes like that. That'd be just absolutely terrible. I will say that what I see a lot that sounds good in theory, but it usually is a very bad decision, is the whole life insurance, thing where people are selling life insurance to everybody. It's like they have a hammer, so everyone's a nail. And so they'll sell these insurance products to everyone who will take it, and it ends up being a very it ends up playing out very poorly. I've never heard a situation where it works well and it was the best decision they could have made, with that money. I'll say it ends up just costing them a ton, and then they have to undo whatever they've gotten themselves into, pretty much 10 times out of 10. So take that what you will, I suppose.
Cool. Well, Mitch, thanks for coming on. Why don't you tell the listeners where they can go learn more about you or get in touch with you?
Yeah, absolutely. Appreciate you having me. If they're interested in learning more, they can go to our website, strongwealth.net, learn more about our services there. Or I'm producing content on YouTube and X as well, at Mitch D. Moore. You'll be able to find my pages there.
Great. Thanks so much.
Thanks, Jack.